Hi, everybody, and welcome to the weekly market wrap for December 15th, 2017. We're almost wrapping up the year, and the year has actually been just one big bull market, buy any dip possible, don't sell anything type of year. And as easy as that may sound, it is not. I mean, it's always fighting the mentality of, hey, it's too high, it's got to correct, we're due for a correction, and it just seemingly never comes. Now, there are some reasons why this is happening, and it's always easy to say this after the fact because you know it's already happened. But the reality is, um, the decrease in regulations, the decrease in corporate taxes that is looks like it's a sure shot to go through now. Um, these are real things that affect businesses in a positive way. So not getting political, whether it's good or bad for you personally or me personally, but just telling you how it affects the market. The reality is that if you're a company that pays 37% in taxes, you're now going to pay 21%. That extra money goes into the coffers to buy back shares, to raise dividends, to make things better for the company to make more money. These are all things that help the price to earnings ratio that make the stocks that we own more valuable. That's why the market's going up. When you see the market pull back like we saw on Thursday of this week, we're looking at an hourly chart of the NASDAQ 100. About this spot right here, where that X is, we actually saw Marco Rubio come out and say he didn't support the tax bill. And at that time, Senator Corker was not saying yes, and there were a few other question marks. So that decline on this ETF from 156 down to 155, that was the decline that we've seen when we were starting to see some weakness in the market. Now, once we came in today, we opened up higher and we started to get some clarity that this bill was going to pass. We then went from 156, now after hours, trading at 158 and all-time highs. And it's the same thing if you look at the spiders. Or, oh, hey, bear with me. If you look at the spider ETF, um, there was a dip and then a rebound. And this one actually shows a dividend. That's why you see that little blue mark there. But um, if you look at it this way, it'll show you the without the dividend. This is kind of what it looks like. I have an uptrend um, to all-time highs, and we're just going to continue to just work the system. So this is why, I mean, the market's tough. It really is. Even though it's seemingly easy, people who do it passively say, "Yeah, the market's easy. It's up. I'm up 20%. It's no big deal. Making a lot of money. Really happy." Well, those are probably the same people that don't realize that they put on risk in the beginning of the year when they decided to act passively. Those are the same people that will, if the market goes lower by 13, 14, 15, 30%, we'll just ride it the whole way down, not get out, not have stop losses. So, I mean, when you're passive in an up market, you're a genius. When you're passive in a down market, either just close your eyes, put your head in the sand, or get mad about it, one or the other. But overall, what we try and do is we really try and play the best risk reward ratios that we possibly can so that we're making money and getting the opportunities of these insiders and how they're actually going about their business and trying to ride alongside them. And we're trying to stop ourselves out when things go against us. So the way the focus list works now is we have a lot more companies on the focus list. We have zero shorts. Um, versus when the market was taking a big hit. Let's just say back in October 2015, I remember having about 7 companies or 6 companies on the focus list, and maybe 2 of them were short. So, I mean, there wasn't a lot of opportunity then. But now there is. You don't complain about it. You just keep on going and make the system work for you. So, yeah, there are going to be hits along the way, but overall, we've had a great year, and I think we'll just continue to do so. So, you don't look a gift horse in the mouth, just be happy with what we have and just keep on making money. So overall, that's the system. I mean, we're if you bought every dip this year because we're at all-time highs for the year, you're a genius. And if you sold at any point along the way, you're a fool. And obviously, I don't mean that, but I'm just saying that that's the way the market is showing it. So we'll just continue to operate as is. The big deal was the tax deal that looks like it's getting through. Things to look ahead for 2018, kind of make this a little bit of a longer video. Um, we have, like it or not, I mean, the government, DC, the Federal Reserve, I mean, these are things that control the stock market. They control monetary policy, fiscal policy. So as much as I'd love to talk to you about the earnings of this company and the insiders of that company, DC has a heavy hand to play here. So things that we look at for 2018 are directly correlated to what's happening with the government. So we have a new Fed chairman, Powell. We have a possible infrastructure spending deal coming up. And we're going to see the tax plan go into effect. And we have midterm elections. So all of those things at one point during 2018 will have an effect on the market. So these are things to look at, not necessarily judge, worry, or buy or sell on, but just kind of be able to take the temperature of the market and put that together with what the insiders are doing. Because there's a very good possibility that the insiders are going to react to these things that are happening, which will then translate into us buying a certain company or not based upon their good track records and their appreciation of how things are going. So hope you guys have a good week. It's a little snowy here in the Northeast. Um, we'll just keep on going. We got a couple weeks left for the year, and hope you guys have a good weekend. All right, thanks.